And we are back. It's on Markets Today. We are looking at local equities. The key headline news: Central Bank of Kenya leaves the benchmark rate unchanged at 7%. And the most exciting news this day on global stock markets is the United States, with GME, a gaming company, actually gaining 121% over yesterday's trading day, with the retail investors actually trying to put it up against the hedge fund and the traditional investors. We are keenly awaiting the opening of the New York Stock Exchange at 5:30 p.m. today, just to keep tabs on what is expected today. There will certainly be premium tiers, and the CEO of Tesla, Elon Musk, online on Twitter is saying this is another game stock, meaning there will be a financial disaster. It's just a matter of time to see who'd actually have to bear this. Exciting news from out there, but when we come back home locally, the NSE yesterday, turnover was up 313%. Not too much happening outside of the blue chips. But it's the beginning of the year. Genghis Capital last week launched its playbook strategies for this year across different asset classes. A well-written report, and what we wanted to focus on is what was the read-through when it comes to equities. And we are joined by Gerald Muriuki, who is part of the team at Genghis Capital, and he is responsible for the equities research. A very warm welcome to you, Gerald.
Thank you, Beda. It's good to be here.
Fantastic. So I'll start us off with equity markets, what's happening. I know we had a bit of banter earlier before we came back on air, just asking ourselves, when will Nairobi have such exciting news over one day? Because there are limits. But what's your take of what's happening in the global markets? And is that something that could possibly happen in Kenyan markets, at least for the next 12 months? Could there be some exciting opportunities?
Yes, indeed, Beda. I think over the recent week, we have seen a lot of volatility in the global financial markets, and most of this was driven by technology-based investors. And this was part of the discussions that we had last week in the launch of our playbook. I think there was a lot of questions about the digital kind of investors and the opportunities that they can exploit in our market. And I think from the comments, both from the CEO of NSC and the chair of the NSC, I think the sentiment was that there's some work that needs to be done in order to enable some of these digital technologies to be adopted locally.
Okay.
I think there was also talk about day trading activities in a local market, so that you can increase some liquidity in the stock market.
All right, so probably I'll just come back to you on the day trading. I know that's a product that the NSC has been mulling over. Do you have a status in terms of, has it already been approved? Is it something that we expect to see soon? Do you get the sense that investors would be excited and there would be an uptake of this?
I missed that. What product?
Now, I was taking you back to the element of day trading. It has been on the table, at least for a while, in terms of being rolled out to the NSC. Could you know what the update of this is, the status?
Yeah, I think we can borrow from the comments that the leaders of the NSC talked about. I think they talked about within a period of the next 6 months, we could have day trading activity in the local stock market. I think there's still some work in terms of merging the systems, both the trading systems and the depository systems, in order to allow a seamless, transactions in terms of day trading. So I think this is something that is in the process and should excite investors well once it comes on board, and likely during this year.
Be waiting to see, but there's always the lag effect because the NSC rolls out new products such as derivatives and day trading, but the market is a bit slow to adapt. But oh well, certainly a very exciting time for equities. Now, Gerald, last year the NSC 20 was down 30% year on year. How are we looking then at stocks this year in Kenya? Is it going to be another negative return in spite of COVID-19? What is your sentiment when you're looking at last year and this year, and what will be different?
So yes, indeed, last year was a bear year. There's a lot of cautiousness, there's a lot of uncertainty, and basically risk aversions across not just the Kenyan market, but also across most of the frontier and other emerging markets. So we've seen, at least for the past 3 weeks of trading so far this year, there's some bullish activity. I think so far this year we are up between 1% and 3% in the market. I think that is going to be sustained over the rest of the months of the year. But again, there's still that uncertainty about the global pandemic. We've seen fresh lockdowns and restrictions, for example, in countries like Rwanda, and this is definitely going to be one of the key things that investors will be looking at. However, when you look at the market multiples, very, very attractive, as we noted in our playbook. I think we are trading at, on average, at price earning multiples for the entire market below the 5-year level. So very good multiples, uh, basically, talking about a discounted market where opportunities are. But then again, for investors, they have to have a long-term outlook, because in the short term, there's going to be that uncertainty, but in the long term, businesses will recover, consumer sentiment will recover, and the economy will be back to the trajectory that it was in before the trajectory, the pandemic, basically.
Okay, fantastic. When you say we are trading at a discount compared to the last 5 years, sorry, I missed that. What is the PE? And the second question over and above that is, Gerald, this conversation of you're trading at a discount is always the conversation at the beginning of a new year when it comes to the NSE. Do we ever get to a bottom? Should we be, because we bought stocks maybe 2-3 years, maybe you've lost some value. So then how should you look at it as an investor if you haven't already deployed capital onto the NSE? Over to you, Gerald.
So thank you. Yes, in terms of market multiples, we are at about 10 times price earnings multiple for the market. Currently, I think on average we usually do 12 to 13 times multiples, and some of these discounts are justified, because yes, the financial performance and business performance is not going to be as good as it has been in the past. But however, we must look beyond the current pandemic and the effects that are currently being felt across the economy. So looking forward, where we have an economy that is booming, businesses are thriving, then there's a positive case for long-term investors. As I said, short-term volatility is going to be there, uncertainty is going to be there, but long-term, all these effects will dissipate away. I think there's positive news in terms of the pandemic, such as vaccines, effectiveness of vaccines, including towards some of these new mutations of the virus that we are seeing. So there's going to be some positive effects in the long term. In terms of deployment of capital, yes, we are seeing cautiousness. I think if you look at what is happening in the equities market, our equities market, and for example, the bonds market, you're seeing a lot of subscription last week in the fixed income side, telling you there's a lot of risk aversion. And when you look at the equities market, last week again, there was some profit taking. So there's that cautiousness by investors looking at the short term rather than in the long term. Thank you. Back to you.
Okay. Fantastic, thank you. So then let's get to the stock picks. I know your report had stock picks and you were breaking down the market into banking stocks and non-banking stocks. Let's start off with the non-banking stocks. What are your top picks at this point in time?
So yeah, from the non-financial side, we're seeing very good price multiples for KenGen, which has announced some good results today. We have also recommendations on East African breweries, expected to announce the results tomorrow, and also Safaricom. However, on Safaricom, the price level that it was when we are releasing our report, about 37 shillings, was quite elevated, and we expect some good price levels going forward.
Okay, and are there any other stocks?
Yeah, so the other stock is from the financial services side or the banking side. And for the key banks, basically the price have come off. I think price to book multiples at historical levels, historical low levels. I think KCB at 0.8, 0.9, Equity Bank at about 1.2, thereabout, which is quite low compared to where on average it has been trading at historically. So across the banks, yes, there's that cautiousness about what is going to happen in the banking space. There's uncertainty about provisioning levels. There's uncertainty about non-performing loans levels. However, if we go beyond just looking at what announcements will be made in terms of financial performance. We are looking at very attractive price multiples for the banks.
Thank you so much for that. I think that's all the time that we had today. Is there any parting shot that you would like to leave our audience with this afternoon, Gerald?
Yes, indeed. I think if you look at, if you have a long-term view of the market rather than a short-term view of the market, I think there's value opportunities across the market. And then again, for the short term, it is going to be that volatility. The banks have a lot that they have to sort out. I think even things like dividends, investors are already looking at what is the dividend story around the banking sector stocks this year. But I think on a long-term basis, I think some of these things will dissipate away. So there's a lot of value opportunity for investors
Okay.
in the long term. Thank you. Back to you.
Okay, thank you so much. That's all the time we had today. So there are opportunities on the NSE. It's trading at a 5-year low with regards to price to earnings ratio. And there are opportunities for the long term as has been depicted by Gerald. That's all we had for you today. Thank you for your time. See you again tomorrow, same time. Good afternoon.